Good morning traders, welcome to this live currency strength indicator table video with me John on this Monday the 7th of August. Apologies for the audio, I'm full of cold at the moment, so I may sound a little bit rough doing this, so I apologise for that. But the markets move on, the tables move on, and we can see at the moment we have a nearly a full board here, to be honest. The only currency that's not highlighted on the tables is obviously either that Swiss franc strength or that yen strength that's been featured here. So other than that, we've got the US dollar topping the trend traders table. It's actually S2 on our day traders. Euro S3 on both. We have the Australian dollar as the weakest currency at the moment on both tables, followed by CAD on the day traders, which is W3, and then we've got Kiwi as W3 on our day traders, W2 on our trend traders. So what does that kind of signal to us? Well, it could still signal that there's a little bit of risk off in the markets, especially with yen being S1 on our day traders table. Now, I've looked around the charts, so I'm going to pick out some of my favourite charts to look at. Obviously, you can look at all the pairs that are featured in green here, which there are 6 pairs in total. We're going to take a look at just a few of those, and we're going to start off with New Zealand US dollar, and you can see there could be some real potential in this market. What I'm going to do is just open this out a little bit. And the way I'm looking at this is, at the moment, the market is technically within a range. It's in a range between the 0 spot 61 handle and the 0 spot 63.75 all the way up to the 0 spot 65 handle. And what we've had obviously recently is that sort of rally to the upside, consolidation pattern. Now, typically on a bigger time frame or on a lower time frame, we would say, is that some kind of flag pattern where you get a rally, consolidation, and then price continues to rally the way it kind of came out or came into that pattern. So you could argue that we've had a rally, we're kind of consolidating lower, and then could price trade higher. But that does not mean prices may be going to continue lower in the short term if we think there's a potential for maybe that sort of flag pattern to play out rather than the horizontal range. If it does, then price could come down towards the 59.70s at least, which are these weekly supporting lows. And if I was just to kind of drag that up there, it's around about 100 pips away from those current prices. So if I was to go down into the daily time frame, you can see that we are getting those sort of lower lows, lower high patterns. If I go to the 4-hour time frame, you can see that in a lot more detail there. Nice strong moves to the downside. Obviously, we in the previous New Zealand dollar breakdown, we were looking for shorts in and around this level in here, and obviously price went to full targets. Price making that breakdown now. So I'm watching to see how price reacts here. You can see I've put in a supporting trend line down through there. We have traded through the larger time frame trend line and retested it as resistance. So we'll see what happens here. I think if price can break down through this trend line support, it could equal an opportunity to maybe trade back down to the downside. If we go to the hourly time frame, you can see price is just trading above the 50 moving average at the moment, which isn't a positive sign if we are going to look for that further downside. In theory, really, when it does trade above the 50, you can see it can kind of hold above the 50. What we want to see is it break back below the 50, drive lower, again, holds above the 50, breaks back below the 50, moves lower. So really speaking, I'm looking for breaks below the 50 and this kind of minor trend line support before considering any kind of short trading opportunities here, considering it is Monday as well, so we might not get much movement today if we're going to actually think of it from an analysis point of view in terms of market participants. If I just kind of relay back to the news, we actually have a Canadian bank holiday today. Tuesday is no high impact data on the cards, and it all kicks off on Wednesday. So we might get a couple of days of just nothingness before we then start to see that data coming into play, which is Chinese CPI. And that could affect the likes of the Australian dollar, okay, which is already a weak currency at the moment. Now, if I go to Aussie US dollar, it's kind of a similar situation there as with regards to the New Zealand US dollar. Now, if I go to a weekly time frame here, you can see all the data's back now. It's all filled in. We are still continuing to move lower. We are coming into a sort of key area at the 0.65 handle. So we could still extend down, maybe even below that. Maybe even the 64.50s could be targets on this particular pair. If we go to the 4-hour time frame, you've got that similar setup. The market's making lower lows, lower highs. We traded through 67.25, retested it on the other side with the 200 daily moving average. That was a nice move and a big move to the downside. We did pause around about the 66 handle. Price has retested that recently. That's Friday, and it started to fall from there. So again, I'm kind of looking at a similar thing, to be honest. If we go to the hourly time frame, see the 50 moving average, price is trading above. Again, got this kind of trend line support that I've just put it through here. Prices at trend line support and the 50 moving average. So if you were going to say this from a technical point of view, price may trade back up into this resistance area through here. That's not particularly what I want to see. I want to see price trade through the 50. You maybe even use it as resistance on the other side, and then look from a move back down into 65 targets, or even the 64.50 below that. Moving on to one chart of interest then. So you can see that obviously the euro has been highlighted here as a strong currency. So I've been looking around those euro pairs. Now, Euro Kiwi pretty much at key resistance levels. If we go to Euro Oz, 1.6750 at resistance there, and Euro Kiwi 1.8050 there. So it's not to say that those markets can't trade through those levels or even break through those levels at the moment. It's just that we may be suited to look at a different market whilst those levels get breached and get cleared out the way. So one of those is EURCAD. We can see that price is above the daily 200 moving average here. We trade into the upside. Last week actually was a nice strong bullish close, and we could argue price is making a higher low there for potential moves back up into either the swing highs here or even the key level that I've posted there at the 1.5050. Now, nice bullish weekly close, usually followed by a bit of a pullback before a continuation move. So if I go down to the 4-hour time frame, what I've looked at is what is price sort of doing here, and you can see we've kind of gone from being in a downward trend, making lower lows and lower highs. We double bottomed here. We've traded through a level of resistance, being this trend line resistance as well. We moved sideways, and then price has traded higher. What I've then done is just applied a Fibonacci tool from the low to the swing high, and you can see the 38.2 comes in at the 146.50 level. That could be a nice level to start looking for potential positions into this market if we were to see a pullback into there. 50 moving average coming through here could be an opportunity to be long, looking for targets back at the high, looking for the next targets up at these highs through here, and potentially beyond that. Now, ATR is saying 107 pips on the stop loss. That's due to the sort of heightened volatilities that we've had in the market recently. So if you were looking to get long at the 146.50, you'd want at least 100 pips on your stop loss, below the 61.8 maybe, or below this kind of spike low in here. First targets is 125 pips, second target's 214, third targets beyond that will look for that 1.5 level, which would be quite a considerable distance away, over 390 pips. So those are the markets I'm really kind of taking an interest in at the moment. Aussie US dollar, New Zealand US dollar, Euro, CAD. We do have data coming up this week, but it doesn't really kick off until Wednesday, so we may get a couple of days of just quiet trading before we get into that news week. So hopefully you enjoyed the video, hopefully you learned a lot, and I'll catch you in the next one.